Alright, so in this video I'm going to quickly explain my assumption and also basically my opinion on Virgin Galactic, which is the space position that I put on a while ago, a poor man's covered call. And right now what a poor man's covered call is, instead of buying 100 shares of that stock, I'm actually buying the long way out in time frame, basically anything over a year. I think the contract is around $400, and so what's going to happen is that's going to lower my capital needed for that same type of position. So the position size is with less capital, but it's the same overall. So what I'm doing is I'm going to buy into one contract and then sell against it at a little different expiration date, usually a month, 30 days to 45 days. Remember, we talked about that theta curve and how it really ramps up past the 30-day mark where you can actually buy that back for a lot cheaper than you sold it for. So basically, I'm buying one contract a year or 2 years out, and then I'm selling contracts against that. Now, if the strike price doesn't go up and over that contract or that strike price that I sold the short for, which we call a short, one that we sell, then I get to keep the position still and keep redoing that over and over, creating monthly income with little to no capital involved compared to just going out and buying stock. So right now, I hope this is making sense. So let's go ahead and jump over to my screen, and I'm going to show you my position within the Thinkorswim platform, and I'm also then going to show you the website of Virgin Galactic, or the ticker symbol SPCE, which is space. Okay, so right now we're on my screen, we're in my Thinkorswim platform, and this is the position that we're dealing with. Don't mind any of these other highlights. Let me just click off of those. Alright, so we're messing with Virgin Galactic Holdings Incorporated. We all know that's owned by Richard Branson. He is a serial entrepreneur and philanthropist. So I'm going to quickly show you when I bought this back on 5/8/20 at 10:22 a.m. And the expiration date when this contract will expire is January 21st, 2022. And the strike price is 15. And I had bought it for $1,100. It says 11.40. So remember, we're always messing with, in terms, every contract is 100 shares. So we have to times this by 100. That gives us the 1140. So right now it's worth $12.80. You can see that I'm up $140, and I'm also up on the short. So even though the space is going up, actually, well, today I've lost money. You can see the position P&L today compared to P&L since open the position. So I open this position, you just right click these, view trades at 10:16. So just 3 days ago, and I'm already up 15 bucks. Yesterday it was up more. It was actually up $17 more. And then today we've gained another $47 in the overall contract, or the long side. So this position is going in our favor, which I assumed it would. And I'm going to go into that here in a second. I just want to give you the fundamentals of buying poor man's covered calls and then selling contracts against them. So as you can see, this was currently it's 459 days. At the time, I think back on 5/8, it was around whatever, how many days that is. I'm not going to quickly go into that, but you can understand the math involved in buying low at 15 and then selling contracts above the strike price. And I do this, I explained this multiple times in other videos. We don't want to pay more for the contract than if we was just to buy 100 shares of the stock, because the overall goal is to sell on the short end and pay this thing off, so basically you can exercise it and get these shares for free. And what I mean by exercise is, if I was just to go ahead and go in and exercise this position, which I could, I would obtain the shares at 15, because remember, I'm buying a contract and the right to be able to purchase space at 15. Even though it's today at 23.40, right? I can still go ahead and just exercise this, and I would obtain it, and I'm going to show you this, at 15. and that would give me the $1,500. And it says max loss. Remember, this is just because we're giving up the capital to be able to purchase this. So in the long run, I've shorted multiple contracts on this. Let me get back to the position. And so really the break even is less than 1,500. It's more like probably 14, 13, maybe even 1,200 if I recall. I would just go in my account statement and go back, filter for space, and add up all the contracts that I've made money off of since then. So that would give me the new break even, which is much lower than actually 15. Okay, so here's the other side of the trade of what I can do if I was to exercise this today. I have plenty of time. I want to make the best profit that I can, so I'm probably going to hold on to this as long as this goes up. Even if this goes down, I can still buy this back at a much cheaper price. And as you can see, I actually sold this for $127, and right now the market price today is $1.12 or 112. So anyways, what I'm saying is I'm going to hold on to this position. But if I was to exercise it, or come expiration, we're still up above 15, I would go in the trade tab and I would just literally look at contracts 30 days to 45 days out and see what I can sell covered calls for. Because remember, covered calls is now on the flip side. You're basically selling a contract to someone that's buying the same theory, what we're doing, on to the right to buy. And if it doesn't go up above that, we don't have to let go of our shares. So I could just take in this premium. That's the other word that we use for basically income, or premium, is selling premium on the covered call side. So if I want to go all the way up to 28.50, that would be able to give me that difference if it was to go up 28.50 plus my premium, and then I would sell my shares to the other person that bought this contract. So we just figure out what our risk tolerance is, what we're willing to make, and if we're willing to let go of their shares. Remember that I always say, never marry a stock. So if my break even is 15 or 14, I'm going to be letting go of those shares for the difference between 15 and 24, and then selling it the difference between 24 and 15. And then plus the premium. So if I want to make extra money and keep a hold of my stock, I would just look at a little bit more out of the money and determine right over here, here's the 93% chance that's going to go up plus or minus 5.9 or 6 points. That puts us around the 29.50. That'd be right around here. And then I would also correlate that with the delta. Remember, delta is probability of in the money. So this thing has a 34% chance of being at this break even or at this strike price by expiration. And these are at the money right now. We're playing out of the money. So these points are going to go up this way, and then we're going to have 31, 32, 33, and so on and so on show up on the board next. But right now, this is all we're looking at. So that's the basis of the poor man's covered call and how to make money using less capital, but the same position or same strategy and same overall goal. If we was just to buy space, we could have bought it for $1,500 versus an $1,100 with an expiration date. So that's the difference between options. You do have an expiration date, but you are messing with less capital. Remember that. If we're buying shares, we have all the time in the world. If it goes up, it goes down, whatever you want to do, we have all the time in the world as long as they don't go bankrupt or something. Whereas options, it's less capital, same position, less capital, but there comes a risk when it comes to the expiration date. It has to be right before that expiration date. But if you're utilizing the right strategies that I teach you, you're more than likely going to make money consistently and exceed those returns what the market gives us, plus what the market, the financial advisors give us. So anyways, let me do a quick show you what Virgin Galactic looks like, okay? This is the assumption or my opinion on Virgin Galactic. They are going to go into the commercial space industry where you'll be able to pay for a plane seat ticket and fly up to space. The days are unknown. I think it is going to be a 48-hour ride, maybe even a little bit longer. But right now, what I'm seeing Virgin Galactic, at the beginning, this was all just theory and rumors, right? When I bought into this contract, I knew there was going to come some risk. test results, crashing, fatalities, and all that. It happens. I'm sorry to say that, but anytime there's a new product like this, there's a lot of risk and a lot of measures to be taken, and it can cost someone's life. Now, they have overcome that. They've done, I think there was one crash a few years ago where 2 pilots or 1 pilot got killed, but now they're actually selling tickets for you to be able to reserve your seat. So they're already taking in income now. Now we're reached like what I call, there's 3 phases. You have your first phase where everything's unknown. Number 2 phase, or phase 2, is where now the company is starting to see revenue. And then phase 3 is when the financials come out for a steady pattern around 5 to 6 years, or even just 3 to 5 years. They now have basically a projection or enough data be collected to determine whether it's a good investment. So remember, the higher the risk, the more the reward. But I take a look at their website, and let's just take a look at this. They're now, as soon as you come onto the website, you can reserve your ticket and buy it. So let's click on that. Let's see how much they are. The website's decently fast. This was a little slow bringing up, but that's all right. The website will probably be, fixed throughout the time. But anyways, we can see it goes into details. 1 small step. Take your first small step to space today by paying a fully refundable registration fee of $1,000. And then there's a little star here, so I'm sure there's an extra note somewhere. So you will be joining our Space Fair community and will be put to the front of the line for new seats when they become available. When they become available, okay? They are taking in revenue. There's no time frame yet when these will become available. So there's still that risk factor. You will also be kept up to date with our progress and enjoy access to Virgin Galactic exclusives. Once tickets become available, you will be personally contacted with a firm Giant Leap offer, an incredible opportunity to confirm your journey to space. So what this is telling me, that there may not be an extra, or there may or may not be an extra cost. You're reserving the seat for $1,000, which we all know that just like when you get into Tesla, there's always extra cost involved. So I can see that becoming an issue later down the road. They don't really tell you. There's not a whole lot of transparency yet. They are becoming transparent, but it's just not enough for probably huge investors getting into this. There are, trust me, every ticker has some sort of investor. It's just that amount of volume and day trading volume that really counts to drive those prices up. So we have the full application here once we pay the registration. And you see that I give consent, and then cool, there's a button, lift off. So you're almost going to be an astronaut. So let's go ahead and go into a couple of other pages and see what they had to say. They have their purpose, their mission, their vision, fly with us, learn, explore, news, kids corner, and watch. So again, this is the virgingalactic.com website. Let's just go into the purpose page and see what they're all about and what the purpose is. It's basically trying to transform every civilian into ability to call themselves an astronaut, but without all the BS training and everything. You will be able to see, space on a commercial level go up, which is pretty cool. We're looking at 2020, and by 2023, 2025, I would say that you will be seeing people go into outer space. So they have this page, inspiration, mission, vision, so on and so on. You can read through these. Go up here, the mission, vision, fly with us. Let's see what they had to say with the fly with us. And of course, there's this become an astronaut on Spaceship Two. That is the name of the flight, Spaceship Two. Fly your payload. You'll even be able to fly your payload. If you don't know what that means, go into the page and read about it. All right, so space to scientists, engineers, teachers, and students. Let's see, we believe that this capability will enable scientific experiments as well as educational and research programs to be carried out by a broader range of individuals, organizations, institutions than ever before. So I would say that instead of just your ordinary civilian, if you're a scientist, researcher, whatever the case may be, you'll be able to take your students up and do research. Probably from the plane itself or from the spaceship, spacecraft, whatever you want to call it. You'll probably be able to do that. And it gives you a rack space for a pressurized cabin. It's giving basically the details here. How many days, let's see, does it say days? Lockers, cargo transfer bags, and server racks. Wow, I can't even read today. But anyways, it's basically giving you exposure to several minutes of high quality microgravity per flight and responsive flight access. So they have all the details what you'll experience when up in space with Space One or Space 2 or Virgin Galactic. And here's a shot of what the plane will look like. It's all pretty cool. So that's one of my investments. That's one of my long-term investment strategies that I'm doing is the Poor Man's Covered Call. I'll give a backlink to what the Poor Man's Covered Call is and where you can read up about that, of why it works. Okay, guys, I'm not a financial advisor. Remember that disclaimer every time I make these videos. I love what I do. I love helping other people. And anyways, the Poor Man's Covered Call, reducing that capital needed for the same type of position size, 100 shares, one option contract, or yeah, one option contract equals a 100 share size comparable position. So just remember that. Instead of going out buying 100 shares of something, you can mess with one option contract for that type of strategy and for that same position with less capital. Now, there is one other. Let's just back out of here. And this is my guild closed position. I had mentioned this a while back that I was opening in my alerts for those that are in the subscription-based alert program. And I just closed this out today. Let me see if I can zoom this in. I can. And what we're looking at is I closed this out with only 5 cents to be able to buy it back. I sold it and I made $25. Now that will lower the loss overall on the long call. This long call I think is around 400 to 500 days still. So as you can see, I'm making almost 10% within literally every 7 to 8 days. I just did it right here. This contract was a little bit shorter in time frame than the average 30 to 45 days of what I sell covered calls on. And I picked up an extra $7 today, making a total of $25.50 profit. And then I just reopened another covered call to be able to pay this thing off. It is going in my favor. Now there is one thing that I want to show you. We are down on Gilead Sciences Incorporated overall 1 point, bringing us down to a market price of $60.80. Okay, but look what's going on. The long has lost $100 today. And this is what happens. You see these volatility, or the volatility in the market where stocks go up, they go down, they go up, and they go down. This will always, typically, with implied volatility, go down when the stock goes down. That's a given. Your long call, when you've bought it, will go down when the stock goes down because it's the same theory. It's a comparison. Instead of being long in Guild 100 shares, you're long in the option contract, so you're losing value there, and then you're making up money in the short. So that's why I always stress, make sure you're selling covered calls, in volatility, because you don't know when these volatility patterns start going up and down, but when they do, you'll be able to read those and be able to pick up profit on both sides of the market. So let's look at Gilead real quick, GILD. And as you can see, my position is now here for 23 cents, $23 for 18 days at the 67 strike price still. I didn't go lower. I'm actually trying to keep my 67 in case it does break that 67. I'll keep the profit higher and also make the premiums back. I could have shorted this around the $1.02, but what if Gilead hits 62.5 at expiration or before? Then guess what? This thing becomes more in value where I'd have to be able to buy it back to close it out for a more and then risk the difference between these two. Or if I don't do anything, I pick up $100 here, but then I lose the overall value of what I bought the Gilead for at the strike price and the difference between 62.5. And it's not enough. My break even is around 67 minus all the premium that I sold in between is probably about 65.5. But like I said, I want to just stretch out the 67 as much as I can. We're only doing 18 days on this. I did extend it a little bit further than the 11, but I picked up a little bit more premium for an extra 10% or 5%. So anyways, I wanted to show you these poor man's covered call strategies, talk about Virgin Galactic, what they're coming out to be in the next couple years, and I think overall that my position will do really well. As always, I'm not a financial advisor. I'm not telling you go and get into Gilead or GILD or SPACE, but I and some of my students are. So if this video helped, make sure you always comment, leave a feedback. Find me on investingondemand.com, investingwithchris.com, and then my YouTube channel, Investing with Chris. So that's it for this video. I hope it helped tremendously, and I'll see you next time.